Hello, my name is Evan and welcome to Evanomics 101, your number one source for everything economics. Today we're going to break down one of the most important developments in geopolitics and economics that is happening right now. And that is the U.S. and Israel military strikes on Iran and Iran's retaliation. So in this video, we're going to break down three key topics. The first one being why the conflict started in the first place. Second thing we're going to talk about is global market impacts, how this is going to affect oil, commodities, stocks, etc. And the third and final thing we're going to talk about is the long-term economic risk and opportunities that might actually come out of these strikes. Before we get into the video, please like, share, and subscribe. And let's now go ahead and dive in. So why was Iran attacked in the first place? Basically, what happened, the United States and Israel launched coordinated strikes on multiple sites inside Iran. That included command centers, missile infrastructure. And according to a lot of reports, Iran's supreme leader was a target and was actually was hit within those strikes. The stated reason from the U.S. and Israeli leadership were that they attacked Iran to prevent Iran from attaining nuclear weapon capabilities, to downgrade ballistic missile infrastructure, and to counter what was framed as threats to the U.S. as well as allied nations in the Middle East. Now, these strikes came after years of rising tension, including stalled negotiations over Iran's nuclear program and severe economic and political crisis within Iran itself. So these attacks kind of triggered a wave of retaliation from Iran, including missile strikes on U.S. bases as well as allied nations in the region. So it looks like for at least the next several weeks, possibly months, we're going to see continued fighting in Iran against Israel and the United States. We're going to shift to the second point, the impact on global markets. So I think this is the most important part of the video, or one of the most important parts of this video. And what the most immediate effect of the conflict that we will see will basically be in oil and energy. Basically, the Middle East and particularly the Strait of Hormuz is critical to global oil exports. Roughly a third of all oil shipments pass through the narrow path, and any threat to that passage instantly affects energy markets. So since the attacks, oil prices have spiked due to fears of supply disruptions and insurance costs rising for tankers. I looked at crude oil this morning. It was up almost 8%. It did retreat or come back down a little bit toward the middle of the day. I have to check and see where crude is, but I can't anticipate the price of oil going up after the attack on Iran. Commercial air travel and shipping have faced some closures and rerouting, which also increases transport costs and squeezes kind of global supply chains. As far as precious metals, so when you have a geopolitical risk, investors often rotate into safe haven assets like gold and silver. But as far as like stocks, equity markets react to uncertainty in a few key ways. So risk assets like growth stocks, they tend to weaken as volatility rises. Defense and energy sector stocks often benefit from increased government spending and high energy prices. Bonds, they rally initially as investors seek safety, but long-term conflicts are going to push yields up again if inflation expectations rise. So to go into some more long-term economic risk and opportunity that we can expect from the conflict, let's take a look behind initial markets reaction and toward some longer structural outcomes. Inflation pressure. Higher energy prices feed directly into inflation. So fuel costs affect everything from manufacturing to transportation to consumer prices. If the conflict disrupts oil exports for an extended period, inflation could become more persistent. As far as your supply chain shocks, many industries rely on just-in-time supply chains, right? So if uncertainty or actual disruption in the Middle East persists, particularly in shipping routes, we could see higher freight costs. You're going to see longer delivery times. You're going to see increased production costs for certain goods. These costs are just going to get passed on to us, the consumer. So just as far as a conclusion or a recap over everything, the conflict started for strategic and geopolitical reasons, but it has huge economic implications, basically to us, the consumers. Markets are already reacting through energy prices, commodities, and stock rotations. But the longer-term outlook depends on how prolonged and global the conflict becomes. We got other countries that may get involved in this, so especially through supply chain channels, and you might see, more than likely we'll see some inflationary pressures that come from this. So quick video today. I just wanted to really kind of just hit on some things. If you found the breakdown helpful, drop a thumbs up and subscribe for more clear economic analysis. Tell me in the comments, which market do you think will feel the conflict the most? Oil, stocks, currencies? Thank you for watching, and I'll see you in the next video. Thank you.